If you don't understand this, you will lose money. Welcome to lesson number 2. The market structure is what we are going to discuss today. So I hope you sit back, enjoy. And before I forget, ladies and gentlemen, exposinga yet with another one. Itabidi kama mmezoea kwa sababu itakuwa ni mbaya. Stick around, students. Make sure you subscribe, you hit notification bell, and then let's move. Now, whatever you're seeing on your screen, this is how the market moves. Okay, and when I say this is how the market moves, is what we want to discuss about the market structure. How is it structured? It is either moving up, it is moving down, or it is moving sideways. Let me try to show you in an image format so we can understand each other. So when the graph pali inaanzia, it is not coming back. It is called the higher high and the higher low. Yani hairudi to the level ilianzia. That is what we call it. But now here, when it is rising up and up, we call it uptrend. When it is going down, we call it downtrend. Okay, so ikiteremka ni downtrend. But kama inapanda ikishuka, both the greens and the reds, then that is what we call what? We call it the sideways trend. And then ikipanda tena, we call it the uptrend. Munanielewa? So this means that actually the price will keep on increasing kwa sababu of the high highs and the high lows. There is not coming back, so the potential of you trending according to the trend is going upwards and not lowards. Now let us talk about the downwards. Just like we've talked about the higher highs and the higher lows, also the lower highs and the lower lows does exist. Kwa nini? Kwa sababu hata venye chart inashuka ikienda chini, bado utaona kuna zenye bado ziko juu kidogo. We call them the lower lows as the chart drops, and also the lower lows. But in between the space, unaweza ona nimeandika kitu inaitwa BOS. That means break of structure, the spaces in between. Okay, so new terminology here is up channel. So when you want to group what was happening on upwards, we call that up channel. And when you want to group again what was happening downwards or what was going downwards, we call that down channel. So wherever you hear me refer to as the up channel, it means that the markets were rising in the market, and when I say of down channel, it means it was dropping. For those who attended the last lesson, you realized I told you that as beginner traders we will be trading. So we go by the trend. We are not going to trade against or what we think we know better. We are going to go by the trend, and that is where we will be including the trend line, because according to it will tell us, are we going to buy because the market is going to be buying, or are we going to sell because the market is going to be selling? So we will be trading what we call trading trends. Okay, yes, we will be going by the trend. What is happening in the market, we will be flowing by that water, but not against that water. So people might be wondering, what are these things that you're showing us? They are stretching. Now this is what we refer to as candlestick. So I've just told you here, this is what we call candlestick analysis, to know what people mean by bullish or bearish. So a candle has its own real body, and then it also has shadows. So the upper shadow and the lower shadow, and then the green, you can see up it's closed, and then the other side on the red it's open. And when now downwards the green is open, also the downwards the red is close. So what this means is, as a trader, when we talk of bullish, it means you are expecting the prices to continue rising, and that is in your confidence and your analysis. When we talk of bearish, we only mean that we are anticipating that the prices of the assets are going to do what? They are going to be dropping, and probably you will now make a decision based on what you think is going to happen based on these shadows and how the candles are behaving. You understand that now? Yes. Let us move to the next one, class. So clearly we have talked of uptrend, we have talked of downtrend, but now this is now what we call the sideways. Now sideways is what we refer to as range. And if you remember in the previous class, I talked of we are going to use resistance and support strategy. Now here, what it means is the price is not going anywhere. Okay, it is not moving up, it is not moving low, it is just in between, like a flag. It's playing like a flag, you know, when I grow older, when I grow younger, I will be, something like that. So it is just waving in between. Okay, that is what we refer to as
sideways, and this sideways is referred to as horizontal range. So it is not moving anywhere, it is just playing around. So that breakout is where now maybe probably it is starting to go down and moving from the sideways and stuff like that. So assuming that we want to use support and resistance in our trade and using our candlestick patterns, this is what we do. You remember when I told you of bullish and bearish? So those are the ones that we apply here. When we look, for instance, the bullish is higher, that means that the price might be rising. But when we see the bearish is dropping, then it means the price of the assets might be going downwards. So as a result, if you're placing your trade, you are going to place your trade at a resistance while you're doing what? You know that the price are dropping. And if the price are dropping, what are you going to do? Are you going to buy or to sell? Let me know in the comment section so that I can know actually we're having a discussion here. Okay, so still on the sideways, when this chart is playing like a flag, as I told you, you can notice that there are some drops, just small little bit of patterns that actually during the uptrend would lie to you that kind of it is dropping, but those ones we call them just small flags in this in this range. So you might see that there is also a range with small positive angle, like now it is taking over, then just up there again goes down and goes down. So it is just a small joke within the within the chart. So these are the things that you have to pay very close attention, because when you are in the sideways, all of a sudden you are at the uptrend, or you have to know which one are you, because if you don't know whether you are at uptrend or you are downtrend or you are sideways, then you are bound to do what? You are bound to lose your money as a trader. So this is very important for you to confirm. Where am I? Am I at the wedge pattern? Am I at the range with small positive angle, or am I on the sideways? So let me just show you how you translate this in a simple chart. Okay, look at these images. What are these? Let me bring up the bearish and the bullish so that you can understand what I have indicated here in those blue circles. So what it means that in an uptrend, the bearish, okay, look on your right, on the lower right, so that you can see what the bearish is. The bearish retracements become smaller and smaller, signaling that less and less people are willing to do what? Less and less people are willing to sell. So if less people are willing to sell, what does that indicate with the bullish? It means that in a downtrend, the bullish retracement becomes smaller and smaller, signaling that less and less people are willing to do what? Are willing to buy. So with that, you can make a decision. Are you going to buy or are you going to sell? But remember, at the end of the day, this is to help you to make a decisive decision before placing what? A trade, okay?
So by now, I want to believe that you understand what an uptrend means. It means price going up. But how do we confirm that? That is where now the question is. The price creates something called high highs. If you saw on the chart what I refer to as high highs and high lows, which means the chart is no longer coming down. It keeps on increasing and increasing and increasing. So higher high means price goes up, then breaks the previous high and goes even higher. Okay, so the way you saw it going like the lightning. So yes, it was going up and then a little bit, then like kind of it's breaking, but then goes up again. Are you understanding? So that what it means, that the higher low means price pulls back kidogo but doesn't go lower than before. So ni ile tu mtu kama tuseme wewe you are a gambler or you are that kind of a person who trades in small minutes, you look at it and then you're like worried, oh the chart is going down, so you either stop or you are confused. But when it is doing the higher highs and the higher lows, it means it's kind of, but it's not dropping. So if you are making profits and then you are losing some few cents, it doesn't mean that you're going to lose your money. So it is also going to do what? To continue picking up. Munaelewa mpaka hapo? So let me try to simplify this by saying it. Uptrend equals to high higher plus high lower, or high low. So this high higher plus high low equals to uptrend, which means it keeps on going. Unaona venye kinyonga natembea hivi? inaenda ikiendanga, haiendi ikirudi pale imetoka, inaenda ikiendaga. That is what we call uptrend. Now, here's the mistake many of the beginners will make, and I noted this. They see the price going up, then they try to sell, okay? Wait, why? So never fight an uptrend, right with it. That's why I told you we are going to do what? We are going to do what we call trending trading. So we are not going to go against an uptrend. So when we see an uptrend is what is happening, and this is our observation, so we continue doing what? We continue going with it until we reach to a point we realize something is not happening properly. Probably this is this is about to run into ranges, or this is about to do what? To go downwards, which we call downtrend. Then that's when we can change. So never go against an uptrend, never go against a downtrend. Because if you think you are going to interpret market like that within those few seconds, that is where most of these traders do what? Lose their money. Okay, now let us talk about the downtrend. I have also shown you on the charts the downtrend, how it works. It means coming down. This is when the price continues to go where? Downwards. Okay, so the price has its lower highs, but it also has its lows. So the low highs means that even if the price looks like kinda it wants to pick up, like rising again, it doesn't really rise. Okay, it's just a little bit of losing some few coins, and then it starts to gain again. Then it kinda teases you like, hey, well, I'm going to increase, but again it continues to do what? To drop. So lower high, lower high. This is what it means. Price pulls back but fails to go higher. You understand? Yes. So our simple formula to downtrend is equals to low higher plus low low. It doesn't go further than that. You get that point? So now again, what do you make a mistake, or where do you make a mistake as a beginner? Exactly here. You start trading using what? Your emotions. You start tensing. Oh, the price is, no, this was not supposed. So the moment you start tensing like that, you start trading your emotions. In a downtrend, sellers are in control. Don't fight them. So, sellers are in control. In an uptrend, buyers are in control. Flow with them. Don't go against them. Are you getting that point? That is very important. Okay? So now, sometimes the market is not trending. It moves sideways. Now, this is where now you don't stick to what? You don't stick to trending trading. This is where now you will apply the other strategy. I told you what we will use is support and, yes, say it. So when it is bouncing, like, it is just like a flag. It does not decide whether to drop, like dropping downtrend, or it is rising. It is just in between there, doing something like this. You get? So when it is doing this is what we call what? We call it is in a range. So price bounces between support and resistance. And as such, you don't do what? You don't trade the trending method that we just left when it is uptrending or downtrading. You understand? So this is where many traders get confused, because there is no clear direction. And I told you, as a trader, if you're not in uptrend, downtrend, or in a range, then you do what? Don't trade. Don't try to confuse your understanding, because now you'll start using your emotions, and that's where you fail. So what is the other thing that you need to understand? It is something that we call market structure shift. Okay? This is where things get interesting, by the way. Markets don't trend forever. They change. And when they change, some of you will again start acting with emotions, and you will do what? You will lose your money. So an uptrend can become a downtrend. Sorry. Unajua mimi ni mluya, so mtaunderstand tu nikishema hapo. And a downtrend can become an uptrend. This is what we call the market shifts. That's when you hear people talk of volatilities in Forex. Okay? So this is called market structure shift. You are expecting for a downtrend to continue, then all of a sudden, it is peaking, and then you're there confused. So for example, if the price was making higher highs, then suddenly it fails, okay, and breaks a previous low. So that means that, for example, we had the high highs, okay? Then the high highs and then the low highs, okay? But then something happens. Instead of it now creating a new high high and then a new high low, it breaks and goes back to what? Even to the lower low. So this means that to the higher lows, it means that it went even further a little bit rather than what was happening there. So that's a warning. It means the trend is changing. What do I mean? Let me show you. Nataka nikuonyeshe example. So for instance, ulikuwa unapanda ngazi. Sawa. So wewe umepanda ngazi, umetoka hapa ukafika hapa. Then ukapumzika kidogo, ukapanda ukafika hapa. Then ukachoka. So ukichoka, badala ushuke ufike hapa, umeshuka tena kabisa mpaka ukafika hapa. Then ukashuka kidogo. So hiyo ina kuindicate nini? What does that indicate? It indicates that the trend might shift. We thought it was the high highs and high lows, but now it might go back to what? It is to the low lows and it is to the high lows and low lows. You understand? So yani inaendelea kushuka kishuka. But again, it can also change. The opposite can happen. You might think that it was going to the high lows and low lows, but then all of a sudden it changes from the low lows to even to the equivalent level of the high lows. So you have to be very careful and you don't have to create with emotion. This is where smart traders enter and beginners get trapped. You get? You can either enter a trade and hold, or you get trapped in between. What do I do? What do I do? Do I stop? You have to calm down, relax. Now, so what is break of structure? This is one of the most important concepts exactly you need to understand as a beginner trader. Okay, so break of structure, I have indicated on the previous chart and I told you it is called BOS. So BOS happens when breaks a key level. So for example, there was a trend that was going, maybe it was upwards or downwards, but then certainly starts forming like a mountain, like a curve in between. So that is what we call a BOS. So for example, in an uptrend, okay, if the prices breaks below a higher low, that indicates what? Danger in a downtrend. You understand? I mean, if the breaks below, if the price breaks below a higher low. Remember, there is a higher high, and then there is a higher high going up, and then there is a higher low. So it is still up, but it is low. So this is what it tells you. When the price breaks a higher low, goes down than the usual, then that is danger. It indicates probably the markets are now going to what? To start downtrending. And if the price above the lower high, the lower high, you remember the high and then the lower high. So if the price breaks the lower high, possibly it is what? It is the reversal of the same. So hapa na lazima ukue macho. So structure tells you what the market is doing, not what you think it should do. So what you think the market should do is not trading. But this structure, this shift, this break, what it means is now the market is telling you, hey, this is the direction we are walking. So don't fight it. Walk that direction. Tunaelewana? So, I want to be honest with you. You don't need 10 indicators to trade. That is the truth. What you need is structure, discipline, and patience. You remember? This is just what I have told you here. Like, you don't have to, like you want to enter into a trade with 3 seconds, you want to come out. 1 minute, you want to come out. It is between that 1 minute that now there are some shifts. You find yourself losing your little money because you are worried, I have to enter a trade like this, and then come out. And that's why I really don't advise people who trade NFPs. You understand? So you just have to understand the structure, because the structure of these candles, the structure of the market will actually help you understand. It is time for me to what? To flow with them. It is time for me to rise with them. It is time for me to either enter the trade, because here I cannot know what is going to happen. So I have to just be a little bit of patience. So most people lose money because they do what? They ignore the basics. They want to become the pros. They want to tell you some languages you don't even understand so that they show their prowess. But prowess is just like a model on the stage. And when they fall, it is when we recognize, oh, there is a model who failed. You understand? And most of these models actually in Forex, they do fall. So now that you understand what an uptrend is, you understand what a downtrend is, you understand what a range is, that means the sideways. You understand what break of structure is, or BOS. So in lesson number 3, what will you be learning? In lesson number 3, I'll show you something powerful. How to actually enter trades using what? Knowledge, not emotions, not what you saw from someone, but what you learned. Okay? So if this, by the way, has helped you, I'll urge you to subscribe, turn on your notification bells, and I want to meet you in the next class when you are ready to study. And please, if you find this information very, very powerful, again, I am just humbly asking you, share it on your WhatsApp status. You might never know how many traders are out there, and this is just what they need right now, and probably it will boost their interest in Forex. Okay? Yeah, it will really boost their interest. So what I want to say is thank you so much. God bless you. It's an amazing journey that we are working together. I'm not saying that I'm a pro in this. I am not. Okay? But I understand the basics. I understand how to execute trades. I understand how the market works. And that is why I have been exposing scammers in the name of Forex for a very long time. But I've realized this exposing isn't enough. But when we train with you and you understand, oh, this is how it works. Oh, this is what happens. This is what happens. I think you will be in a position to be able to see lies from reality. Okay? So thank you so much. I really appreciate. God bless you. See you in the next class tomorrow. Remember, it is Monday to Friday. Unless something happens in between, I'll see you again. Turn on your notification bell. Ciao.